Hey, welcome to Three Things Thursday. I'm Bill Bourbonnais, and I'm glad you're joining us today. So let's jump into today's topic. One of the most common tax myths I hear is this: all I need is an LLC to save taxes. Now that sounds reasonable, but it's also wrong. And it's dangerous because people make bad decisions after they form the LLC. So let's break this down into three distinctions that actually matter. The first distinction is legal structure does not equal tax treatment. An LLC is a state law legal structure. It's not a tax strategy. The IRS doesn't even care that you formed an LLC. It cares how the entity is taxed. From the IRS's perspective, an LLC is usually one of four things: a disregarded entity, a sole proprietor, a partnership, a corporation. There is no classification in our tax code called LLC. So if you formed an LLC and nothing changed about how the IRS taxes you, the LLC didn't change your taxes. If you don't know how the IRS is taxing you, the entity choice didn't do anything. Our second distinction: asset protection is not the same as audit protection. Now, LLCs can help you isolate legal liability. They do nothing to justify tax behavior. I have an LLC is not substantiation. It's not documentation. It's not a business purpose. And it's not reasonable compensation. In fact, poorly run LLCs often make audits worse because they create confidence without discipline. The IRS doesn't audit entities, it audits behavior. Third distinction: formation does not equal tax savings. Decisions do. There is no deduction for I formed an LLC. If it wasn't deductible without the LLC, it's not going to be deductible with it. Tax savings comes from what happens after the formation. Savings come from elections, compensation structure, accounting methods, timing, and asset treatment. That's why people can stack multiple LLCs and still overpay their taxes. An LLC with no intentional decision is really just a filing fee with a logo. So in closing, LLCs are tools. They're great tools, but tools don't save money unless someone knows how to use them. That's why in future episodes, we'll talk about things like S corporations and depreciation strategies, but none of that works without this foundation. And if this wasn't clear before, now you know why it matters. Thank you again for joining us for this Three Things Thursday. Again, I'm Bill Bourbonnais. I'm happy to help you out. Keep listening to these and subscribe below. Make sure you get all the latest updates and have a great day. Thank you.